Gold has been in consolidation for more than a week now, basically since the start of the Fed blackout period at the beginning of last week. This has been viewed as a critical meeting as far as the central bank is concerned, as investors look for clues as to when they'll begin tapering those emergency purchases that they started more than a year ago at the start of the pandemic. And markets have really been focused on this. All since the start of the week, we have seen markets across various different asset classes have been in a very cautious place, have been waiting for this Fed meeting. And this is no quiet week. This is a massive week on the data side. This is a massive week on the earnings side as well. We had big tech earnings yesterday. We had Tesla the day before. And yet markets have just been fully focused on what the Fed is going to say and do this evening. And gold is no different. Like I say, gold has been in consolidation for about a week and a half now, around that $1,800 mark, and it seems that we're waiting for that next move from the central bank, that next hint, that next clue to determine which direction the yellow metal is going to head. Now, I think it's going to be really interesting from the Fed. There's plenty of reasons for them to stand pat for now. Firstly, they've said before that they view this inflation surge as being transitory. So that is one reason why we could see them adopt a more cautious approach. They've also in the midst now in the US of another surge in COVID cases. So the Fed is likely, you would think, to want to see how that plays out now over the next few weeks. If we continue to see a surge, if the vaccines that have been taken up are going to have an impact on the hospitalization and fatality rates, and therefore what restrictions are going to be needed in order to deal with the situation there as well. So there's a number of reasons really why the Fed could choose to wait and see how this plays out and wait for further information before making a decision on this later on in the year, and reasons why they may not want to cause a bit of a taper tantrum in the markets. But obviously nothing is ever a given, and the caution we're seeing in the markets this week is built on the fact that we are seeing markets which are quite elevated. We are seeing investors that are optimistic, an economy that's running quite hot, talk of potential peak recovery, and therefore the downside risks if the Fed decides to move too soon could be significant, and that's why we're seeing that caution, and it's being felt in gold. We've seen gold at these elevated levels around $1,800 because yields are so low and are continuing to be suppressed. If the Fed alludes to the fact that it is willing to continue to persevere as it is for now and look past the inflation data that they're seeing, because they continue to view it as transitory and make a decision on tapering later this year, then that should continue to keep yields lower. That should continue to keep investor sentiment strong, and that could even support as well gold prices because of those lower yields. Now, as you can see in the chart, we're currently trading around that $1,800 level where we've been floating around now for the last week and a half. The key levels are pretty clear. I think we've got 1833 above. That's the start of June highs, and just below where we are right now, we've got 1790. But you'd think that could that wouldn't stand much of a chance if we do see gold sell off as a result of some tapering hints from the Fed, or if the markets believe that the Fed's moving too soon and we see yields rise. You'd think that 1790 would start to look quite weak. At which point we're looking at those June lows. The 1750 mark is going to be the critical level below if the Fed does disappoint here. Now, looking above, like I say, we've got the region which we've been trading in recently, 1833, then above there, which is that peak where the 50 fib level merges with that previous high, and then the 61.8 fib above there around 1850 again would start to look really, really pivotal. If we see a move above these levels, if the Fed delivers that dovish surprise that the market so crave and almost expect at this point, and we move through that 1850 level, then suddenly things start to look a lot more bullish for the yellow metal. But I think what we all need right now, really more than anything, is for gold to just break out of these ranges, end this consolidation, and make a move in one direction or the other, because it is consolidating. The ranges are closing. It's becoming ever tighter by the day. So I think a breakout tonight following the Fed looks highly likely.